in this video, I'm going to go through the market outlook for next week. Now, as per your feedback, I'm going to make it short. I'll go to the point, give you the key biases as well as the key level to focus on. Now, a quick recap about this week's performance. This week's performance was pretty good at the start. I think midweek we were up about almost 200 pips, but we gave back a big portion during the drawdown that we had towards Thursday and Friday. This is something that not a lot of traders talk about. You know, they always focus on maximizing gains, but they do not talk about minimizing risk, which is minimizing their losses. So it's very important that you understand that trading is both. You have to maximize your gain when you're right, and you have to minimize your risk when you're wrong. So you can see right here that we cut our losses very quick, and that's why we were still able to turn the profit for the week. So this is something that you have to understand. It is a two-pronged approach. Do not just focus on maximizing your gain and not mitigating your losses. Okay, keep your losses small. Now, let's look at the Forex Factory economic calendar. Next week will be the 11th of October to the 15th of October. So the first thing that you have to note is that next week on Monday, it's a bank holiday for US. So that means you're going to expect low liquidity, meaning that price may not move much. Of course, the euro market is still open, so the euro trading session will probably be normal, but don't expect the market to move during the US trading session. Now, we also have the FOMC speeches, which I hate. Okay, right here's the FOMC speech 1 over here. You have the meeting minutes here. You have 1, 2 more. Then you have 1 more here, and then you have 1 on Saturday as well. So next week, again, it's not going to be easy. Okay, I hate this kind of weeks, but it is what it is. We have to deal with it. So please don't expect it to be easy. Please don't expect the market to trend in one direction because we have all these speeches. Now, if you are new and you don't understand why I hate speeches, the short answer is because you never know what's going to be said during a speech. Anyone can say anything, and then the market can interpret it in any way it wants, and then it goes crazy. It's not hard economic data like this, where the big institutional players already know the numbers beforehand and already have taken their positions. So this is why I hate conferences, and this is why you have to be very careful during weeks like this. In fact, the past few weeks we have been having conferences week after week after week, and you know, it's just non-stop. But it is what it is. We have to deal with it. Okay, so before I jump straight into the analysis, please make sure you grab the free day trading guide right here. The link is in the description. This day trading guide consists of the strategy that I'll be using to analyze the market, the MPE trading strategy. So if you have not gotten it, please download it in the description down below, because you will not understand how I analyze the market if you do not grab that. Okay, at the same time, please do me a small favor and hit the thumbs up button and subscribe to the channel if you have not already done so. Now let's look at DXY. So DXY, the bias is still bullish because we have a high here, low, higher high, higher low. Now, the entire week has been consolidating within this range. I do expect price to retrace lower because I do think that there are a lot of traders who bought here and placed their stop loss just below this level. So they see this candlestick pattern and then they buy. So what the market is likely to do is that the market is likely to sell down first to trigger these stop losses, and then after that start going up. Okay, this is a very typical movement of the market where it wants to whip out the stop losses of the traders. So just be very careful. This is DXY, which is the dollar index. You may not trade directly into it, but do expect some weakness into the dollar first before a dollar strengthens. Okay, so just take note of this level and this trend line here. Euro dollar, the bias is still bearish. You can see that this trend line is still intact. You have a high, low, lower high, lower low, lower high, lower low. Okay, however, if you just look at the price action right over here, you can see that this candle right here closed below the swing low, but after that on Friday it closed back up. So this movement here is actually a fake out, is a bear trap. So I do expect the market to retrace higher first. Same thing as the DXY. I do think that there are a lot of traders who shorted here and placed their stop loss above here. So what the market is going to do is it's probably going to go up higher, trigger the stop losses here, and then start selling down. Okay, so you have to be very careful. If you shorted here, you want to lock in some profits because this is a bear trap. So it's very likely that price is going to retrace higher. Just take note that this entire zone that I've mapped out, this entire zone, this box here, this rectangular, this is the entire zone of resistance. So don't think that just because price closed above this high, then price is going to go up. This is the entire zone of resistance. A resistance level is never a single level, it's always a zone. Okay, so just take note of that. Now moving on to pound dollar. Pound dollar is sitting on resistance currently. So this trend line looks broken, or rather it's not very clear whether it's broken. In fact, if you just adjust it slightly down, it looks broken, but if you adjust it back here, it's not really broken. So it's not very clear, but the bias is still bearish because you have a high here, low, lower high, lower low. Okay, so it's still bearish. However, before you go short, I want to highlight that this is a very important support. You can see that this level here, this was supported, this candle low here, price couldn't close below it, and then price on Thursday, it sit just nice on this level. It didn't manage to close below, and Friday it tested the level. Okay, so this level is very important. If this is to be bearish, then this level must be broken. Okay, if we do not see this level broken, then what might happen is that price might just go up. Okay, so before you go short, please make sure that you watch out for this level here, 1.35784, and if that level is broken, then we should see the swing low right over here. Let me just adjust this swing low right over here as support. Okay, moving on to dollar franc. Dollar franc is still bullish, however it's been pretty nasty. So you can see that the market structure is still intact. You have the high here, the low, higher high, higher low, higher high, higher low. This low hasn't been violated. Okay, price retraced into this level here, but it didn't break the low right here, and price is sitting on the ascending trend line now. If I just draw the trend line like that, you can see it's sitting right at the trend line right now. Now, however, price is struggling within support and resistance. So support, I've already pointed out that this level is the support because of the ascending trend line. Resistance, you actually have an entire zone right here that I've drawn this box right here. You can see that this was the high, this was the high, this was the high, and price is just struggling here. So same thing as pound dollar. Pound dollar needs the support to be broken. For dollar franc, this entire zone of resistance must be broken first in order for price to go up. And if it's broken, then we're probably going to see the next level, which is here, which would be the potential right shoulder. Since this is left shoulder, this is the head, and this is the right shoulder. Okay, Aussie dollar, not very clear, but right now the bias is bullish because this head and shoulders pattern seems to be in play. You have the left shoulder here, you have the head, and right over here actually you have the right shoulder. Okay, now price is at the neckline, so for it to be bullish, we need to see the neckline be broken, close above, and retrace back down and test it. Okay, just look for a candlestick pattern here and you can go long. The other alternative is to wait for price to retrace back to the right shoulder over here, look for a candlestick pattern, and then you go long. Now if this level is broken, the neckline is broken, then the next level will be 0.74048, okay, which is right over here. Dollar CAD, the bias is now bearish. Previously was bullish because of this ascending trend line, but this ascending trend line is broken, and this double top pattern is broken as well. You have the first top here, the second top. This is the neckline. You can see on Friday it closed below the entire level. However, price right now is very close to support. Just look to the left, you can see that there's some structure here and structure here. So please be patient, let price retrace up, retest this broken trend line, look for a candlestick pattern here, could be a shooting star, could be an engulfing pattern, then you take a shot down. Okay, very straightforward, but you have to be patient for this one. Kiwi dollar, the bias is mixed because it really depends on how you see it. If you see the big picture like that, you could say that this is the left shoulder, this is the head, and this is the right shoulder, therefore it's bullish. However, if you were to look at this entire movement down, you could say that this is the low, this is the high, lower low, lower high, lower low, so this is bearish. So it really depends on how you see it. Now, I don't recommend that you trade this because it's ranging. I just want to highlight that this is support and this is resistance. Okay, we need more confirmation regarding the direction. If price breaks up, then it's bullish. If price breaks down, then it's bearish. Very straightforward, just need to be patient. Dollar yen bias is still bullish because you have a high here, low, high, high. In fact, even before this high, you have low here, high, higher low, higher high, higher low. Okay, so bias is always bullish. However, price is sitting at resistance right now. If you just scroll back, you can see that this entire zone right here, it's resistance. So right now price is in a resistance zone, so please do not chase the market. Let price close above the entire resistance, retrace back down look for a candlestick pattern that is bullish and hopefully is in confluence with this ascending trend line, then you can go long. You just need to be patient for this one, wait for this level to be broken. Now let's talk about gold, XAUUSD. It's the same as the Kiwi dollar where the bias is mixed, because it really depends on how you interpret it. In fact, it's almost the same because you have the left shoulder here, you have the head and right shoulder, so you could say it's bullish. But if you look at this movement down, you could say this is a high, low, lower high, lower low, lower high, lower low, and this is still bearish. So it really depends on how you see it. Now I just want to highlight that this is support and this is resistance, so we need to be more patient. If price breaks up, then it's bullish. If price breaks down, then it's bearish. Okay, I don't recommend that you trade the range because this range is pretty tight. And by the time you get a confirmation, something like this, let's say you want to sell at resistance and you use this candle, you're already selling in the middle of the range. So it doesn't really make sense. Okay, so please be patient. Moving on to Euro Pound. Euro Pound, the bias has changed to bearish. Previously, it was mixed because this entire zone of support is broken on Thursday. Friday, it still stays below it, so I do think this level is already broken. You just need to be patient, wait for price to retrace, look for a candlestick pattern, and then we can short it down. So if this level holds, then the next level will be this level over here. Bearish bias for this one. Now moving on to NZDUSD 100. NZDUSD 100 is a bit tricky. Okay, I do think that the market condition is bearish. I didn't write it down. Let me just write it down quickly. So this is bearish because you have a high here, low, lower high, lower low, and right now price seems to be resisted by this level here, this swing low previously. However, one thing that I'm seeing right now is that price might potentially do a pump and dump, meaning to say that a lot of traders were shorted based on this candle or this candle. So same thing as the DXY case study that I just went through earlier, they might put their stop loss above here. Okay, and the market loves to do this kind of stuff. The market loves to trigger your stop losses. So I do expect the market to go up, push a bit higher to spike this level and hit the trend line first before selling down. So you got to be very careful if you want to short it. You need to make sure that you are not getting your stop losses triggered. If you short here or you already shorted, just make sure to use a wider stop loss. If not, be patient and let price do the whipping first. Trigger the stop losses first, and then you go in when price closes back below this level over here. Okay, that's a fake out play. It's a bit more advanced, but you can do that also if you have more experience. Now lastly, we have pound yen. Pound yen, initially the bias was bearish, but now it looks like it's bullish already because this descending trend line is broken. Okay, however, there's a zone of resistance over here, this rectangular box that I drawn. This is entire zone of resistance, and right now price is approaching resistance. So it's not that you cannot buy, but you need to buy at the right time and at the right place. So be patient, let price break the entire zone of resistance first, look for a retracement down, look for a candlestick pattern within the zone, and then you can go long. Okay, please do not buy now because you are buying the resistance, even though the market condition is bullish, right? Because you have a low here, you have the high, you have the higher low, and you have a higher high, so it's bullish bias. Okay, so this was a rather quick one. I hope you got a ton of value. If there's any other currency pairs that you'd like me to analyze, please let me know in the comment section down below, right? Do drop a thumbs up if this is helpful for you. Okay, do make sure that you manage your risk next week because we have a lot of speeches as I mentioned earlier on. Okay, if not, thanks for watching. I'll catch you in the next video.